Well, hello and welcome to the Lending Podcast. We are your hosts. This is JB and I'm Jeff Jones, and we are coming from Austin, Texas here today to talk about home buying and what location does for your loan. So, if you're out there looking at properties, we want to give you good information. You can make good decisions. My wife and I love looking at properties, even though aren't buying right now. But we go online. She's always loving looking at location. I'm looking at price and footprint. But location, location, location. So what does location have to do with your loan?
Well, there's so many factors. I think for buyers and sellers, the two favorite words out there that we hear are unique property. Oh, I found this
Ooh,
property. It's really unique.
there's nothing like it.
There's nothing like it. It's great. And then of course for a bank, for a lender, that can be a
It's
challenge.
terrifying.
Those aren't really two words that we want to hear as a lender, right? Unique property. We want your house to look like every other house in the neighborhood as far as lending is concerned. But we understand the uniqueness of properties is the draw, and for myself personally, we have a log cabin up in the mountains as a second home. We love it. It's very unique. It's on acreage.
It's got character.
And it's got character, yes. And so we understand that's very desirable for a lot of our buyers out there. And so thinking about some recent and current transactions that we have is part of what spurred this podcast, because we have two, and I'll give you two quick examples. Then we're going to talk about really how the location of your property can affect your loan. Okay. We'll also talk maybe a little bit about land loans versus single family house loans and just structures that are on the properties. So let me give you two examples. So right now we're doing a loan for clients that are buying a barn dominium. So this is a modified barn structure that has been converted to a single family home. It has bedrooms, it has bathrooms, it is a barn, a rectangle barn structure, right? Barn dominium.
And almost all those are metal frame. So
that's right.
And there are people that don't want to use the word barn dominium or barndo. They call it a metal framed house.
Metal frame house. That's right. It's synonymous with barn dominium. Exactly. Yeah. And this particular house happens to be on 19 acres. Nice. It's on 19 acres. It has an agricultural exemption. There's a barn dominium on the property. It has a tank on the property, some water. Very, very unique property. Mm-hmm. It's exactly what my clients have been looking for. And they have been looking for 6 years for something like this. They have been on the hunt for something like this forever. Now, what type of loan can they get? Okay, so we're doing a conventional mortgage. It's 3% down in this case. And the requirements are that the appraisal include 2 similar properties, at least 2. So what does that mean? That means that there's got to be 2 other barn dominium type properties that have sold in the last 6 to 12 months that are within a couple of miles and meet those appraisal requirements. So that's one example of how this amazing, unique, really cool property may not be financeable if the appraisal doesn't meet the guidelines. It's not that the value's not there, it's that the appraisal has to meet certain guidelines. So that's one example. And then we've got, I was just telling you, we have a tiny home, a log home, tiny home on 6 acres up near east of Lampasas. It's a really cool, it's going to be a little getaway. There are no walls in this structure. It is 290 square feet. The kitchen, you can see the kitchen from the couch. You get the fold-out cabin, 290 square feet.
Okay, that is very small.
It's a tiny home. It's a log cabin tiny home. Very desirable second property for this buyer with his family who wants to take his kids up there on the weekends. And so we're seeing these types of unique houses. That one cannot be financed with a conventional loan. We had to use a bank portfolio type product for that, a local bank. It's 20% down. Very, again, unique. So we go through the pre-approval process. We talk about this a lot. What does it take to get through the pre-approval process for a buyer? The buyer meets the credit requirements. The buyer meets the income requirements. They have the assets, or they're getting a gift for the down payment. The buyer looks great. You're pre-approved. Yes. Then we send you out to go find a home, and you find a 6-acre tiny home log cabin. Now what?
Yeah, it's a curveball for your lender. So what we're talking about is, expectation versus actualization, right? So I'm expecting to go get a home. I'm going to get pre-approved. You get pre-approved. The lender's like, great, you qualify. Then you find a house that is a little different. One of the biggest changes that people don't realize with pre-approvals is we have estimates in there. Excuse me. And most of our estimates are super general. So we estimate taxes. That's one of the biggest ones when people are like, hey, I'm looking at this house. What's my monthly cost? I'm also looking at this house. What's my monthly cost? The two huge factors that we don't know is taxes and insurance.
That's right.
We know what the mortgage payments can be. We know all these other closing costs that majority wise, we're really good at estimating with some pretty smart fees that drop in there. But we don't know what taxes are going to be on that home. And we don't know what insurance is going to be on that home.
That's right.
So those are huge variables that we need to look at an address to figure out for you. And then we have to ask questions sometimes.
Yes.
Like,
yes.
What do you do with the tiny home?
Right.
So also too, we've had lender or borrowers, sorry, come to us and say, hey, I want a USDA loan. And we're like, great, awesome. That is on a map on their website, and you have to buy a house that pops up on their website.
That's
so
right.
Those are location specific programs that are wonderful.
Yes, and USDA is a great program. As a side note, if a house has a swimming pool, it's disqualified from being a USDA eligible property.
Even if it's on the map.
So many nuances. Yes. So that's
Yeah.
so really the topic for this one was more how does location influence your lending types, your loan programs, your interest rates, closing costs, all those things, amount down that you may need. And so the location, Lampasas versus Austin versus Dallas, pick an area where you buy your home, the type of property that it is and where it is can actually influence the type of loan that you get.
Yeah.
And one of the things that we've been seeing a lot more of is a rise in down payment assistance loans. And we really love to use these programs for our buyers, even though they may have the down payment. There's a lot of reasons to look at a down payment assistance loan. And we just closed one yesterday. First time buyer and lovely couple expecting their first child. And this is their first starter home, if you will. But the starter home is actually going to be a 10-year plus home. They told me, they said, we're going to be here for a long time. So where you buy and what type of property you find will help us give you better information about what type of loan you should get. So for them, it made more sense. Hang on to their cash, take the down payment assistance. They're going to be in the house for at least a decade. So it made more sense. So we just see certain areas have incentives and bonuses, if you will, home buying bonuses, depending on where the property is. So location matters so much. And of course, if you're out there and you're looking at a traditional subdivision and you're putting your down payment down and you don't need down payment assistance, and then most of the time that would be a pretty vanilla 30-year fixed if you want, or 15-year fixed. And there's not a lot of nuances to that financing, sure. But we still need to look at things like, is it a condo? Is it an investment property? Does it have HOA? Does it have certain requirements on that property that may or may not meet underwriting guidelines? And so the location and the type of property really is the other important component of closing on a mortgage versus just you being pre-approved as a buyer.
Yeah, and you want to look at the history of the house and see what changes possibly. If it's in an HOA, can HOA change the dues? If it's got a really weird qualified exemption for their taxes, whether it's 65 and over, disabled veteran, so their taxes show up online as dirt cheap, that might not be available for you. You have to look in to the county appraisal district and do an estimated future tax for yourself. So all that to say is what you're seeing online might not be what will be in your hands after you close of costs. So you want to know what the costs are for that property. You want it looked into. And then like you said, so there are programs that are specific to areas. Is that in an area that you can possibly get a special program for and get a better loan for or better down payment assistance for? So we got program specific, that's also location specific for taxes and insurance. Then once it's appraised, what kind of strange things come up with the structures or the land? Is it on a floodplain? Because that's going to change your insurance if it can be insurable. Does it have ag exemption or can it get ag exemption? Put some goats on it, some bees, whatever you might want to do to get some lower taxes. How much acreage is it? Because there are programs that only allow up to certain acres. Is it listed as a farm? Because that changes a lot of things if it is. That restricts our programs. Then the last biggest thing I think is the use of the property. If it's not going to be your primary residence, is it going to be a second residence? Are you buying it for like Airbnb or VRBO? Because we have programs that are specific for those purposes too. So,
Yes, and we've touched. That's really good. The Airbnb and VRBO business really took a spike there for a few years.
right.
When interest rates were a lot lower, it made second homes really escalate in popularity. And then Fannie Mae and Freddie Mac, who buy the majority of the conventional mortgages out there, they changed their guidelines on second homes. I believe this was about 2 years ago. They changed their guidelines where a second home interest rate and an investment property interest rate are now essentially the same, very similar.
And the costs to get it are the same.
Yes.
Hmm.
Whereas the second home interest rates prior to 2022 were the same as owner occupied interest rates,
Right.
which when we bought our second home, we got really amazing interest rate because the guidelines were different. So that's something else you have to understand and pay attention to as a home buyer when you're choosing a lender who you want to make sure they are up to speed on the latest guidelines as well because these things do change. You don't want to get blindsided and then get a pre-approval and 3 months later find out that the guidelines changed but you're already under contract and oh now sorry we can't do that, we have to do something else now. And these surprises are not something our buyers do not want, and I don't want to see surprises. I'm a consumer, as we're both consumers as well. We don't want to see surprises, midway through the process or at closing. So full transparency, so critical. I love how you touched on taxes and insurance. These two things are major variables for payments out there. And raise your hand if your insurance has gone down in the
Oh,
last
no,
year.
not me.
And one person out of 100 just raised their hand. I don't know,
Yeah.
somehow they save money on their insurance. Our insurance costs are going through the roof. It's
Right.
insane. Ours went up 60% in 1 year, our home insurance,
Unreal.
on both of our properties. So that's something you may have a low quote initially, but as a homeowner, you need to be prepared for what could happen next year. And this is not about doomsday stuff. This is
Yeah.
just like what could happen, prepare, have a nest egg, and be, in a position to understand that your payment could go up,
And
because of these.
yeah, that's a good point. So if you're a buyer out there and you're looking at possibly buying your first home or your second home, and you have a pre-approval with a lender, that's great. Hopefully, you have been introduced to a good, insurance agent that can get you adequate, realistic quotes, and you're also pre-approved for that binder to get sent out for that program. When you're looking at houses, you can also call your insurance agent and go, is this insurance the same as this one that I was estimating? Because, I'm thinking it's going to be $150 a month. Well, then you get a house that has an old roof or has questionable claims on it and from the past for that property, maybe foundation repair, something strange that happened to it. It'll look up claims on that property. And all of a sudden, your insurance, instead of being $150 a month, is now $350 a month, and you didn't anticipate $200 a month for just having the same insurance policy.
That's right. And if you're already too far into the contract process
Right.
before you find that out, you may be past the point of no return of
Right.
terminating that contract. Like, oops, it's in a flood zone. Oops, the insurance is double what you thought,
Yeah.
or triple what you thought. And now all of a sudden, yeah, your payment's $200, $300, $400 a month more than you anticipated.
Right.
Because, and please, please, please know that the online calculators are not accurate.
Not even
You
close.
need to be working with someone who can run specific property.
Right.
And I love what you're saying. Even at the time you're putting in an offer, call your insurance agent, or we have great insurance connections. Let us get a quote for you so you are going in eyes wide open with what that payment's going to be.
Right.
And it comes back to this location where the property is. Give you an example, rural properties, if they're a certain distance from a fire hydrant, that insurance policy is going to be astronomically expensive. Why? Because if there is an issue at the property,
Yeah.
the fire department can't get to your house and put the fire out, and you're going to have a total loss. So it's more expensive. So there's these little nuances that we've uncovered over 30 years of doing mortgages.
Yeah, location matters greatly to an insurance agent. I mean, if it's a coastal property, if it's on a floodplain, if it's near water, if it's not near water, if it's near a high fire area. I mean, how many claims have happened in that area? If the storms pass over those mountains more than other places, and there's a lot of hail damage every year, You don't
Yes,
know. Like
that's
those
right.
things matter to your insurance cost.
I want to touch on flood insurance for a second because I
Yeah.
think this, and this isn't something we necessarily prepared to talk about today, but when you said it, it made me think of this. And you may be thinking, if you're watching this or listening to this, gosh, I would never buy a property that's in a floodplain. And I don't blame you. However, the interesting thing about flood certificates is the structure of the house doesn't have to be in the floodplain for the property to be in a floodplain. So,
Right.
give you an example, you have a huge backyard that slopes down to a creek. The property, the house is built up out of the 100-year or 500-year floodplain, but the tippy corner of the lot is just just inside the floodplain line.
Yeah.
That is going to flag on the flood certificate, and it's going to require you to get flood insurance.
Mm-hmm.
So it doesn't necessarily mean that the house is on the
Right.
lakefront property on a lake that could change levels. It means that the actual survey of the land, the address is flagged in the FEMA system as possibly being on a floodplain. So you're loving this house, you want to put an offer in, and you say, well, this house looks great. It's up on a hill, et cetera. It's got a big lot.
It's got a creek in the backyard.
Got a creek in the backyard, and we all want that, right? And you have no idea until you're halfway through the process that it's in a
Right.
flood zone. That won't happen with a good lender. We pull a flood certificate up front, and then, oh, it's in a flood zone. Now you're starting to get flood insurance quotes. Well, your flood insurance cost can vary based on your elevation certificate. So that's something else. If you're buying
How
a
high up
house,
the house is.
yes, elevation based on, yes, the property's in a flood zone, but the house is 10, 12, 15 feet vertically higher than the floodplain line.
Right.
That matters. So your insurance company needs that information. And if you're a homeowner, home buyer / insurance agent out there, you want to make sure you're getting that information from a seller. And in many cases, a buyer can take over a seller's flood policy. So if the flood policy of a seller is at a very inexpensive rate, 200, 300, $400 a year,
Mm-hmm.
talk to the seller, and the agents need to talk to each other, find out if the buyer can take over that flood policy.
Yeah, adopt policy.
And keep their costs down. So just because it's in a floodplain doesn't mean you run. We just need to unpack those details and find out what is it about.
And if it's
the
a
property.
big parcel, it might be able to be, with the county, be able to be separated. So only that parcel that's near the creek is on a different parcel now
True.
than what the house is. But there's a lot of nuances there. The big thing is giving yourself, like you said, eyes wide open, awareness of what could be there, what shows up, options to fix it, so that you can get that house you want.
Yes, and that uniqueness of the property, that special dream home that you're looking for, make sure you're asking the right questions and getting with the right lender who asks the right questions, so that we can help you avoid those pitfalls, avoid the snakes in the grass, avoid the extra costs and the surprises. You just gotta avoid those surprises, and that's what we're here to help you do.
Good. I like this episode. I think that unique properties are fun. Location does matter with your loan officer. It's not just kind of, here's our one product, you're good to use it for whatever property you want. We have to cater it for that new property address. So giving an address to your lender is a big help for us to make it doable for you. And we're here to help you get successful with your home ownership.
You bet. Thanks for being with us today.
Thank you so much. Bye-bye.
Take care.